Welcome to the Deerwood Realty YouTube channel. I'm John Schenk, founder and managing broker of Deerwood Realty in St. Louis, Missouri. Mortgage fraud. Fascinating topic for me as a real estate agent, real estate broker. We don't really want to be in that space, right? We don't want to be doing fraud. That's not good. It's not good for the career. So I try to avoid it like the plague, and I don't know enough about everything to be 100% sure I'm not going to be involved in it. But from what I know and from what I've seen just over my more than 10 years now of being in the game, I thought this was an interesting article and something we could discuss. So I was first tipped off about this by this tweet here. It just says, a pair of New Jersey loan officers arrested for mortgage fraud, systematically originating loans for investment properties while labeling them as primary residence to get the lower rates. You can rest assured this is the tip of the iceberg. Only question is whether the DOJ has the will to unpeel the onion. I don't think they do. I don't think they do. This is not something that is a surprise to me, at least, as far as mortgage fraud. Now, you often think of fraud as like, somebody's been victimized. I don't know who gets victimized here. The taxpayer that subsidizes the 30-year mortgage? I don't know. That underwrites it? I really don't know. But for those of you who don't know, your primary residence, you typically get the best rate possible for a mortgage rate. So a 30-year fixed, best rate possible. Right now, let's just say today that the 30-year fixed is about right around 7%, okay? You can walk in a mortgage office for a primary residence and get a fixed rate mortgage for about 7%. For an investment property, it's got to be around 10 or 11 minimum on a 30-year fixed. Now you say, well, why? Why is it different? Well, there's more risk. There's assumed to be more risk because if the investor lives in the house that they're staying in, their primary residence, they're likely to not let it go into foreclosure. But if things get tough and like the tenant screws up the property, then they're more than likely they're going to get rid of that property or not take care of it, and that's the rationale for the higher mortgage rates. Now, does that happen in practice? Well, we'll get to that. So let's see how this went. I have a tab here. This is from Housing Wire. It says the DOJ charges one of America's top loan officers. Loan officers like to call themselves LOs for short. An alleged mortgage fraud scheme. Now let's just cover ourselves a little bit. One, I'm not going to talk about the guy's name because I don't know anything about it. Two, I'm not going to. It's alleged. The trial hasn't happened, so innocent until proven guilty on this one. And so let's get to it. So let's look at this. It says, 2 former New Jersey-based mortgage loan originators have been charged with conspiracy to commit bank fraud by the U.S. Attorney's Office, District of New Jersey. So the loan originators, like when you call like a mortgage company, that's the first person you're likely to talk to. They're going to take your application, and then they're going to work on the loan for the most part. So the fellow has been recognized as a top-producing loan originator, at one point being named Scotsman's Guide's 4th-ranked LO in America, which is a big deal. He's doing a lot of loans. And so then he has an assistant that was also named in the suit. Moving on down, it says this is the allegations from 2018 to October of 2023. The fellows used their position to conspire and engage in a fraudulent scheme to falsify loan origination documents sent to mortgage lenders in New Jersey and elsewhere, including their former employer, to fraudulently obtain mortgage loans. Okay, so what does that mean? It means they kind of put all of their there's all these things you need for a mortgage. You need to know your income. You need to know this. You need to know that. And so they put all that in there, and apparently they probably just missed it. There was a box that said, is this a primary residence? And they're like, oops, I missed that one. It was probably just an honest mistake. Right. So it says the pair allegedly routinely misled mortgage lenders about the intended use of the properties to fraudulently secure lower mortgage rates. So we talked about this. It's going to, if it's a primary loan, and I understand as the mortgage rates have been climbing, it gets really, really expensive to start trying to go in an investor rate. I mean, 12 and 13% for a mortgage. Then you've got to charge that to your tenants when you figure that out when you buy the property. I mean, we wonder why rents are so high. Anyway, it says they often submitted loan applications falsely stating that the listed borrowers were the primary residents of certain properties when in fact those properties were intended to be used as rental or investment properties. Now, if you want to get into the intent article, the intent idea, say I go to get a mortgage, okay, and I buy it's a multifamily property that, let's just say it's a duplex, okay. I'm going to live in one and I'm going to rent out the other one, okay. So do I put that it's a investment property? No, because I'm going to live in it, right? Or my intention is to live in it. But let's say like something comes up after I buy the property and I no longer intend to live in it. Have I committed mortgage fraud? I mean, to me, it's a gray area. I'm not saying that it's a good idea. I mean, I'm not saying that you should do that. But I mean, I remember during 2008, there were people that rented out their properties after they, after they moved out, like they had to move for work or something, couldn't sell their property at the price where they would be made whole. And so they leased it out. I had heard the due on sale clause kicking in on some mortgages, but I don't think many people policed those mortgages for those people that intended to live in it as a primary residence and then they moved on. How many of those people, after they got a second mortgage for a different property, just kept that primary mortgage rate on the property that they originally had? It says the alleged scheme misled lenders about the true intended use of the properties, and they secured and profited from mortgage loans that were approved at lower interest rates. Now, this is a very interesting thing. Look, if you're a mortgage loan officer, under certain types of payment, how you get compensated for writing up loans and closing them. Now, your compensation may be based on, you may get partially a salary, you may get bonuses of things of that nature, but you have to produce. You have to produce. So the way this is written, they're saying the fellas, they profited from mortgage loans that were approved at lower rates, but we don't know that that's the case. We don't know that their clients would have gone elsewhere had they not secured this lower rate. We don't know that. It says the alleged conspiracy also included falsifying property records, including building, safety, and financial information of prospective borrowers to facilitate mortgage loan approval. Now, look, every mortgage you get is a challenge. You have to fit in these boxes that they make, and they're so ridiculous. The 30-year mortgage in itself, for instance, if you're employed, right? Well, you would think you'd be able to get a mortgage, but if you have student loan debt, you can't necessarily get approved for a mortgage. And there's all kinds of weird things that can basically kneecap you when you're trying to get a mortgage. And so I work very closely with my lenders, or the lenders that I use, to try and get mortgages closed, not in a fraudulent way, but just understanding up front, like, look, if just something as simple as, are your parents going to give you a gift? And how is that gift going to be documented in the mortgage application? Just things like that. There's a lot to it. It says the actions of these former employees appear to have been coordinated to benefit them financially. Really? Like, that's a shock. And so it says, when listed as the fourth top producing LO in 2022 by Scotsman Guide, the publication placed his total value at $1.175 billion for that year alone. 1/3 of his loans were purchases, with the remainder being refinances. Now, let's remember, back then, rates were like at 2 and 3%. Then you've got something. If you can get a 30-year fixed on a rental and have that finance down from like a 5 or 6%, So there's your mortgage fraud. It happens. I don't know if these people I don't know if they're guilty or not. I'm just saying there's quite an issue there. And I thought about some questions, and I want to go over them because I think when you think of, we'll get into it, but let's get started here. So we have the first question: how did the fraudulent activities impact the victims financially and emotionally? Who are the victims here? Who are the victims? If you're paying the mortgage every month, okay, who's the victim? You say, well, they're going to dump the properties eventually when the real estate market crashes, or if okay, but that hasn't happened. Are the lenders the victims? Do you really think the largest mortgage lenders in the United States are victims of anything? Are there any systemic issues within the mortgage industry that allowed this fraud to occur? Well, your pay is tied to your production. I mean, that doesn't mean break the law, right? But boy, there sure is an incentive to get a deal done. You know, it's just like in real estate. Look, the last thing you want, I've never figured this out. If you're looking for a real estate agent, do you really want the guy that's calling you 14 times every hour? And do you really want that guy? I mean, why is he calling you that many times? What's the issue here? Is it possible that he needs to pay his bills and he can't, and so he's just praying to God that you're going to be that one sucker that buys a house within the next 30 days so he can keep going? I mean, just think about it. It says, how can real estate professionals better educate their clients about potential fraud risks? Well, I actually always tell my clients when we're buying a house, I say, you're going to live there, right? Yes. Okay. Because you're going to sign this thing at closing that says you're going to live in this house and that it's not an investment. And they can get you for mortgage fraud. I've said that for a decade. Now, does that stop everybody from doing it? No. And does it hurt me in my business? Probably. There's probably people that know that I don't want to play in that pool, and they'll probably go someplace else. And that's fine, right? Right? So that's the way I think about it. It says, how can lenders and regulatory bodies improve their oversight to detect and prevent mortgage fraud? Well, did they in any way, these people got caught, right? So how do they need to reform that? They don't. But what really should be talked about more often is we need to stop the financialization of houses. Okay? Not everything needs to be an investment. A house should be a place you live. You shouldn't, I don't think you should own 100 houses, quite frankly, single family houses. I think that affects the supply of houses. I think that raises the prices of housing for everybody. And I don't think it's as good. And I think if you're a corporate entity, if you're on Wall Street, I think you should be looking in the multifamily space. I don't think you should be building and developing large rental tracts of single family homes throughout the United States. That's just me. It says, how do mortgage fraud cases like this one affect public trust in the real estate and lending industries? Well, people don't like real estate agents. I don't think people trust real estate agents. I don't trust lawyers. I mean, it's sad, but that's kind of the way it is. And I think, honestly, that some buyers and some sellers look for the most slimy real estate agent possible because they're probably hiding something about their property. They're not disclosing something that they know. Or, it's just the way it is, right? And as far as lenders, I mean, they're in the same boat, although they typically don't get the hate that the real estate agents do. I don't know exactly why. But anyway, I don't think there's a high level of trust. And there's not a high level of trust in Congress. No one particularly likes the Congress. But that doesn't stop them from doing their job. And I don't think that it's going to stop people from doing their job in these industries. What I do think it does is you just set an example. You just said, the DOJ just said, look at what we just did to this guy. He was the fourth highest producer. Let's get him. And so now everyone else will say, like, okay, well, now that you're prosecuting, I think we'll back off. I honestly don't think they could prosecute everyone involved in this, like across the United States. I mean, it would be a nightmare. And I don't think they want to open that can of worms. I think that they're doing this to set an example for the rest of us. I thought this was interesting. What measures can borrowers take to verify the legitimacy of their loan officers and lenders? Well, it's kind of fascinating, and I've talked about it. It's production, right? If you have an agent that sold 100 homes, how are they not legitimate? They sold 100 homes. That's your legitimacy right there. Same thing with loan officers. I mean, the guy was the fourth largest loan officer in the country. I mean, he's legit. Like if there's one thing that it should count as legitimate, it's the production. What impact does mortgage fraud have on the overall housing market and property values? Well, I think mortgage fraud is causing the value of properties to go up. And then you have to ask yourself, well, does everybody want house prices to go up? Well, if you're a seller, no. Oh, I'm sorry. If you're a buyer, no, you don't want it to go up. No, you want to buy a house at a low price. If you're a seller, I talk to people all the time. They're so happy that their house is so expensive. Talk to a guy. They're flipping a house like 3 doors down from him, and that house is probably like $30,000 or $40,000 more than the rest of the neighborhood. And he's ecstatic. He's thrilled. I'm like, you're going to have to pay extra taxes, And he's like, I don't care. What do I care? I'm going to get more for my house when I sell it. So it just depends on which shoe. If the shoe is on the other foot, I don't know. I tried to do it and it didn't work out. But anyway, let's move on. How might this case influence future regulations and policies within the mortgage industry? I don't believe that this is a mortgage industry issue. This problem has widespread implications. I think that we should really look, I don't have a problem with the 30-year fixed mortgage for a buyer of a home, maybe not even 2 homes, maybe not even 3 homes. But the mom and pops that people talk about, they're at like 100 or 200 homes now, okay? And then Wall Street's up at 1,000 homes or more in the community. Okay, those start to add up, and it starts to restrict the supply of housing, which causes prices to go even higher. If you want more affordable housing, perhaps people should be looking into this issue. Should houses be the financialization cut up that they've become? I don't know. What do you think? I mean, I don't particularly want people to commit mortgage fraud. Okay, I think that's bad. I think this is a very gray area in this subject. It's not like you're taking out loans for properties that don't exist. Someone's paying that mortgage. So, anyway, put your thoughts, comments in the discussion below. That's all I have for you today. Hey, it's been a long time, and I'm sorry. Things are crazy. But thank you for watching. Thank you for listening, and I'll catch you on the next one.